So very good morning to all of you. Now today we will going to see problem number 18, and in problem number 18 we have a concept of issue of a bonus shares. Okay, and along with that a maintenance of minimum balance in a profit and loss account. This is the two important thing which we will going to see. Your problem number 18 goes like this way. The summarized balance sheet of Moonlight Limited as on 31st December 2020. On the liability side, we have 5,000 equity shares of rupees 100 each, 5 lakh rupees, 20,000 9% redeemable preference shares of rupees 10 each, 2 lakh rupees. Profit and loss account, we have 1 lakh 85,000. Current liability 1 lakh rupees. Whereas on the asset side, we have four items: fixed asset, investment, cash at bank, and other current asset. On 1st Jan 2012, the company decided one redeemed preference shares at a premium of 2 rupee per share. When I say the word 2 rupees per share, I mean to say 20%. Okay, because 2 rupee is 20% of 10 rupees. So either I can say 2 rupees per share or I can say 20% of amount. It is the same thing. Let's see, 20,000 multiplied by 2 comes to 40,000. Similarly, 2 lakh multiplied by 20% comes to 40,000. So answer will remain same. So either you take 2 rupees per share or you can write 20% premium. Second point, realize investment at 90% cost. So the cost of the investment is 2 lakh rupees and we are realizing. Realizing means we are selling investment or converting our investment into cash at 90%. That means we are making a loss of 10%. So 10% of 2 lakh will be 20,000 loss we are making. Issue of required number of equity share at a premium of 40 per share. Premium of 40 per share. So 40 is a 40% of 100 rupees as per the requirement of the Companies Act 2013. And what is the Companies Act requirement? We have already spoke. We will going to use first of all whatever divisible profit which is available with us, and if there is any shortage, that shortage will be fulfilled by issue of equity shares. Point number D says required to maintain or leave a credit balance of rupees 20,000 in profit and loss account. He says minimum balance you have to maintain. इससे पहले वाले प्रॉब्लम हमने देखा तो वहां पे लगा था कि 10,000 छोड़ के बाकी यूज कर लो. They have not written कि you have to maintain 10,000. They have already written कि 10,000 छोड़ के बाकी कर लो. That is why while calculating premium we have utilized that 10,000. But here they are telling very clearly we require to maintain or leave a credit balance of 25,000. Okay. Point number E says issue bonus shares at par in the ratio of 1 share for every 10 shares held on 31st December 2020 after a new issue out of the balance in capital redemption reserve account. What they're saying, on 31st December 2020, how much number of equity shares we have, we will going to consider that particular equity share only. Okay. In short or indirectly, they mean to say new issues will not be considered for issue of a bonus shares. So the ratio in which we are issuing a bonus share is 1:10. So right now we have 5,000 equity share as on 31st December 2020. So divided by 10, 500 more bonus shares we will go to issue. You are required to show necessary journal entries to record the above transactions and prepare balance sheet after the redemption. This problem was there in October 2015 and April 2016 university examination of adult for 20 marks. Now let's move to the problem sheet so that we can start doing the calculation. This is the problem sheet with us. The first entry, which is on 1/1/2020, will be sale of investment. Let's see. The sale of investment, we are selling investment at 90 10% of the cost. That means 10% we are making a loss. So look at here, bank account debited we are making a loss. So here it will be profit and loss account debited to investment account. So here we will going to write being investment sold at loss. Okay. Now here we got 1,80,000, 20,000 we made a loss, and the total amount of investment was 2 lakh rupees. Now our next entry will be issue of equity shares. Now we are not aware how much number of equity shares we will going to issue. So for that purpose, first of all, we will going to see how much number of or how much minimum CR we can able to maintain out of a divisible profit. The shortfall of the amount will be arranged by issue of equity shares. So let's see, in profit and loss account, we have a balance of 1,85,000. 1,85,000. Okay. Loss in sale of investment, we made a loss of 20,000. Apart from that, less minimum balance we require to keep in our profit and loss account is 25,000 as per statement number D. As per statement number D. Okay. Then we are going to provide premium for redemption. How much premium we want to provide? 2 rupees per share. So total number of shares we will want to redeem is how much? 20,000. So 20,000 multiplied by 2 comes to 40,000. So 40,000. Let's see how much amount is available for creation of CRR. 1,85,000 minus 20 minus 25 minus 40. So 1 lakh is available with us. Okay. Now how much number of capital we require for redemption of preference share? Now here we are not talking about total claim. We are only talking about total number of preference shares amount. So that is 2 lakh rupees. Okay. So from 2 lakh, 1 lakh is already arranged from CRR. So balance is 1 lakh. So 1 lakh amount of equity shares we will going to issue. And we are issuing equity shares at 40% premium. They have written 40 rupees per share. 40 rupees per share, which means 40% of 100 rupees. आप either way पे calculate करके देख लो, it will going to come the same thing. Let's see. Entry will be bank account debited to equity share capital account to securities premium account. Okay. Being 1,000 equity shares of rupees 100 each issued at 40% premium. Now let's see. Now let's see whether you calculate as per 40 rupees per share or 40% premium. Doesn't going to make any difference. 1 lakh rupees का हमने क्या किया? Equity share issue किया. 1,000 equity share we have issued. So 1,000 multiplied by 40 comes to 40,000, or 40% of 1 lakh again comes 40,000. So it doesn't make any difference. So total amount we are getting 1,40,000 by issue of equity shares. Now the next entry will be, as you people are aware, transfer of claim. And here we have 9% redeemable preference shares share capital account debited premium on redemption of preference share capital account debited to 9% redeemable preference share holders account. Okay, narration will be being claim transferred at 20% premium. Okay, let's see. 2 lakh rupees total capital you want to redeem at 20% premium, which comes to 40,000. Okay, so total we will going to get 2,40,000. Next entry will be providing premium for redemption. Entry will be profit and loss account debited to premium on redemption of preference share capital account. We will write being premium provided for redemption of preference shares. Okay, amount is 40,000 and 40,000. After this, we will going to calculate or create a CRR. CRR amount we already know. We have to create a CRR for 1 lakh rupees. So write down profit and loss account debited, profit and loss account debited to capital redemption reserve account. Okay, being CRR created for redemption of preference shares. Okay, amount is 1 lakh rupees. Next is claim settlement. And claim settlement entry is very simple. 9% redeemable preference share holders account debited to bank account. Now here there is no case of any untraceable preference shares, so we will go to give the entire amount of 2,40,000 to holders. So here in the narration we will write being claim settled at 20% premium. Okay. Now the last two entry is related to issue of bonus shares, and they are saying the shares will be considered only till 31st December 2020. So let's see, number of equity shares as on 31st December 2020 is how much? 5,000. How much? 5,000. So here we are going to write 5,000, and bonus declared in the ratio of 1:10. So this 5,000 divided by 10 comes to 500. So total amount of bonus shares that can be utilized from CRR account is 500 multiplied by 10 comes to 50,000. So my declaration of bonus shares issue entry will be capital redemption reserve account debited to bonus to equity share holders account. ठीक है, here we will write being bonus share declared in the ratio of 1:10. ठीक है, amount is 50,000, and here we will write issue of bonus shares. So bonus to equity share holders account debited to equity share capital account. Here I will add being bonus shares issued. Amount is 50,000. So there were total 8 entries in redemption of preference shares. So this total 8 entries will come for 14 to 12 marks between that. Okay. And now we also have to make a balance sheet. So balance marks will be adjusted in balance sheet. Let's see the balance sheet. Making of balance sheet is very simple. First of all, understand the structure. The structure will remain same. Only 1 to 1 item will change. Okay. So first of all, we will going to write about share capital. For share capital, we have to make a note. Note number 1, we already have a 5,000 equity shares of share capital of rupees 100 each. Okay, this is already there on 31st December, or I should say before the redemption took place. After that, we have issued 1,000 equity shares for a purpose of redemption of preference shares. Then we have issued 500 bonus shares. Okay, that is also a equity share, so I can write okay, bonus shares of rupees 100 each. So let's see the total amount. Here it comes to 5 lakh rupees. Here it is of 1 lakh rupees, and 50,000 is automatically taken by the computer. In Excel, this is a very good thing because they have calculated the formula. 5 lakh means multiply by 10, 1 lakh means multiply by 100. So similarly, this might have been 50,000. So total amount 6 lakh 50,000. Okay. Now second is reserves and surpluses. So first of all, write down we have profit and loss account. There we have a balance of 1,85,000. Okay. Then less, first of all, loss. I can write directly from here so that we can save our time. Loss for investment, control V, and then we also transfer the minimum amount B. So here write down that, make it in a proper way because presentation is very important. Yes. So here loss of sale in investment 20,000, then premium provided 40,000, and next is less transfer to CRR account. So here we made a 1 lakh rupees. So in the outer column it is 1,85,000 minus 20,000 minus 40,000 minus 1 lakh comes to 25,000. Then we also have a capital redemption reserve. Okay, in that we have 1 lakh rupees less, I can say, issue of bonus shares 50,000. So balance is 50,000. And after that, we have last thing, that is security premium. This security premium we got at the time of issue of equity shares 40,000. So total we got 1,15,000. 1,15,000. Okay. Now other thing as liability is concerned, yes, we only have current liability with us. Okay, 1 lakh rupees. So we will write under trade payable 1 lakh rupees. So straight away it comes here 1 lakh rupees. So total of liability side is 8,65,000. Now coming to the asset side, let's see on the asset side. We have fixed asset investment we have already sold. Okay, हमने बेच दिया, sold, so this will not going to come. Only we will go to write fixed asset 3,50,000. 3,50,000. Okay. Now coming to current assets. Under current assets, we have cash at bank and other current assets. So in other current assets, we have 4,25,000. Now let's see cash and cash equivalent, starting with opening balance in bank. How much we have? 10,000. Now let's see. Now we will going to add, first of all, add sale of investment. From sale of investment we got 1,80,000 rupees, and then we went for issue of shares. So issue of equity shares, from here shares we got 1,40,000 amount. So total we have 3,60,000 less we paid amount to preference shareholders. Paid to preference shareholders. How much? 2,40,000. So we have 90,000 with us. So here I will write 90,000 as per the schedule 3. So now here I have tallied my balance sheet by 8,65,000. I hope you have understood the problem. The problem was very simple, and there is no doubt there is only two tricks here. Number one is keeping a minimum balance of 25,000 profit and loss account, and the rest of the amount you can utilize for creation of CRR. And second, issue of a bonus share till a particular date. Okay.